Contractor. Today's video is all about how to get a mortgage when you're paid a day rate. Hello, welcome back to our channel and podcast. My name's Gemma, and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then please do subscribe to our channel and hit the thumbs up. I know we always say this, but it really does help with our YouTube algorithm, and make sure that you don't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftikhar joining us once again. Ifti is a trained accountant and a mortgage broker who's been in the industry for over 10 years, and he is also one of the founding directors here at WIS. Welcome back, Ifti. How are you doing today?
Hi, I'm very well, thank you. How are you, Gemma?
I'm good, thank you. So today we are talking all about contractors. We know contractors very well, don't we, Ifti?
Yeah, we do. I've been working with contractors for the last, 12 years, I think, as an accountant, and thereafter as a mortgage advisor as well. So yeah, I've been working very closely with contractors in the past.
All right, well then let's kick off today's show with the first question. Who normally gets paid a day rate?
Okay, so the obvious answer is a contractor, but there are a few others who fall into this category as well. Some agency workers fall into that category because some agency workers get paid on a day rate. Also, we have 0-hour employees or 0-hour contractors. Now, they sometimes get paid on a day rate as well. So these are the three main people who fall under this category. But the most popular one is contractors. That's people who work for IT or people who work as an engineer. Maybe they work for advertising as well, but they just get paid on a day rate basis and they're on a short-term contract. So those are the ones who generally get paid on a day rate basis.
And for those who don't know, how does getting paid a day rate affect getting a mortgage?
Right, okay. This area is always quite tricky, right? That's why you generally go to a specialist who kind of know about this area. So the perfect example is, let's take somebody who is employed. So if somebody is employed, it's very easy for the bank because you get a pay slip at the end of the month. So if the bank wants to check your income, you got a pay slip which you can cross-check and you can verify with HMRC as well quite easily these days. So with that, it's quite easy for the bank. Now, what makes it difficult for the contractors is A, because they work on a temporary basis, and B is they are paid on a day rate basis, so they don't really get a pay slip, right? In the past, a lot of banks considered contractors as being self-employed, but banks know that contractors regularly get work, so they have made things a little flexible. But only thing is the checks, you can't do it as easily as a permanent employee who gets a pay slip. So that's why it's a little difficult to get a contractor mortgage. It's not so straightforward.
Okay, so then how do lenders work out how much you can borrow when you earn a day rate?
There are different methods lenders use, but the most common method is what I'll talk about because that's probably the most relevant one. So one of the main things that lenders look at is your income. So when you look at your income, if you go with a salary slip for a contractor, quite often their salary is very low. So it doesn't kind of add up the numbers. So with contractors, what most lenders do is they take their day rate and they assume the contractor will work for 46 weeks a year. Now this can vary from lender to lender, but most lenders look at 46 weeks a year. So they will multiply your day rate by 46 weeks. Obviously, most people won't work the whole 52 weeks because there'll be some holidays in between and they will have gaps between their contracts as well. So factoring that, banks look at 46 weeks. So that will be kind of your income line. And obviously, then things like your expenses and commitments are looked at the same way they look at for a normal employed applicant. So that's the way they look at contractors.
Then how long do you have to be working for before you can get a mortgage as a contractor?
Good news is banks consider day one contractors. That is really good news. If you have a contract and you just started work, bank will consider you subject to you having experience in that line of work. So for example, in the past, if somebody has worked as a, say, finance professional and they've got a contract as a IT contractor, banks won't consider that as relevant experience. But if they've always been an IT specialist and then they go and work as an IT contractor, they've been in the same line of work. So banks will consider that. So that is the good news, right? So contractors benefit from that quite a lot, right? I know some banks even ask if somebody's on a probation, they wouldn't give you a mortgage, right? So, if you look at it that way, a temporary employee, being able to get a contract and then being able to get a mortgage, it's a great thing, right? So, yeah.
Yeah, definitely. So then, does it matter how long you have left on your contract?
It does. So, for example, most banks will insist that you have at least 6 weeks left, right? So what the bank says, look, does the guy have enough, money to pay off his first mortgage payment? That's what the banks will be looking for. So in that sense, they will want to see at least 6 weeks left in the contract at the time of application. So if you're applying today, you've got to have 6 weeks from now. Some banks will say 8 weeks. We have banks who also say 12 weeks or 3 months, right? But there are exceptions. So if you are a seasoned contractor, you've been contracting for a long time, and your contract is probably have 4 weeks or whatever it is, banks sometimes look at it as an exception, but that's outside the bank's lending criteria. So if you are doing something like that, it's always best to speak to a specialist who will be able to guide you and help you out. Because not all lenders will consider you may have to get an exception before you apply. So, that's something that you have to be mindful. But this is what I tell my contractors as well. Contractors are very lucky because in the past, they have been considered as self-employed. So if you are trying to borrow maybe slightly lesser than, going to your maximum limit sort of thing, self-employed route, you can take that as well. So which means we can look at your tax returns, that's the SA 302s, or your company's accounts, we can look at that. And there might be options for you looking at that route as well, right? So those options will be available for you as well. So if you have less than 6 weeks left in your contract, it's always best to speak to an advisor because there might be a way around it anyway.
Okay, thanks, Ifti. Also, something else we kind of see a little bit now is people having several contracts. So does it matter if you have several contracts, and does this look better to a lender?
Yes and no, right? It's not a straightforward answer. Generally, if you're a contractor, banks say we are only interested in people who have one contract, right? But there are a couple of banks, at least I know, who have considered people who have 2 or 3 contracts, right? Because some people only work part-time in one place, they work part-time somewhere else, and they make up their time. So there are lenders who will consider that as well. But the good news is, like I said, contractors are not always judged based on contracts, right? Because they can always take the self-employed route. So if they are taking the self-employed route, you having 2 contracts, obviously your income will be much higher, right, than one contract. So if you are going to go in that route, you might still get the mortgage you require, or your company's accounts will be healthy as well. Because if you're not taking, maximum salary and dividend out of the company, but your company has a lot of profits, they could look at that route as well. So it may work in your favor, just using, self-employment route, right, instead of the contract.
All right. So then what are the rules if you are in between contracts?
So if you're in between contracts, you have to satisfy the bank that, it's only some kind of a temporary thing. It's always best to sort of get an agreement before you make an application. Because at the end of the day, your income is stopped, right? So that's generally alarm bells for banks. So it's always best to have a conversation before you make the application. But like I said, banks, I know in the past, they have been happy to accept people who have been in between contracts. So that's the main thing. You just need to have communication and be very clear to the bank that you're in between contracts. Yeah.
So does it matter if you've been contracting in different job roles, or does it have to only be the same type of job?
Usually banks like to see experience, because the more experience you are in your area, that's when banks like to give you work, because that's when they have the confidence saying, okay, he's got a past track record, so that person will be okay. So yeah, in that sense, that's probably the best thing to do. But if you have different types of contracts, banks may want to see experience in that area. Again, that will probably come to bespoke underwriting. You probably have to speak to the underwriters. That's generally a job of an advisor. Advisors will go and talk to the banks and get an agreement before you make that application. Because let's say an artist who works as a contractor and they also do work, let's say, as IT contractor, bank may not like the combination, right? So those things are generally not part of the general rules of the bank. So you may have to go and talk to the banks. So that's the job for advisor. The advisor will do that on your behalf.
Okay, and then now we're just going to briefly talk about IR35, inside or outside, because does this affect getting a mortgage differently depending on which one you are?
Yeah. I mean, IR35 kicked in April this year, so that sort of caused a lot of confusion in the market. But thank God things have got better since April. It was very difficult to get a mortgage back in April. but things have evolved and changed for the better. So if you're outside IR35, all the rules I told you earlier kind of apply, right? You can just use your day rate. It's not a problem. If somebody is earning, say, £300 a day, you can use that using the income multiple. You can use that to see how much you can borrow. But with being inside IR35, things have changed because there are people who now work through umbrella companies. There are people who work as a fixed term contractor. So those are the common ones we find, people who are inside IR35. And also we have contractors who work through their company but inside IR35. So those three categories you have. Now, these are like, for most banks, it's a new thing, right? So therefore, it's not fully evolved yet, right? So there are deductions, right? So if somebody earns, let's say, £300 a day and umbrella company charges a fee, you have to take that off. And the umbrella company usually splits your income as basic pay. And sometimes they put the remaining pay as a bonus or a commission. Now, when you say a bonus commission, banks generally don't consider 100% of that, right? I'm not saying all banks do that, but there are restrictions like that with a lot of the banks, right? So that has made things a little bit more difficult for people to get a mortgage if you're inside IR35. But outside, generally all the old rules apply. But like I said, the space is evolving, it's changing quite a lot. And, between April and now, there's been quite a lot of changes, right? It's getting better, but you may not be able to borrow the same amount that you were able to before. That's what has changed a lot, yeah.
So now let's just talk about the umbrella contractors then. Do you have any kind of comments for those people trying to get a mortgage?
Yeah, so with umbrella contracting, it's very different because, like I said, we can't consider 100% of your day rate. There are certain deductions we have to sort of take off, like the umbrella company fees, and each bank considers bonuses, commissions in a different way. But if you have something like additional income, sometimes banks look at it in a different way. So if your umbrella company marks your income as a bonus and commission, it actually can impact your mortgage. Right? A lot of people don't know this, right? But if the umbrella company shows is at an additional income, it may work in your favor. So if you are planning to apply for a mortgage, being inside IR35 and working through an umbrella company, it's probably best to get advice upfront, right? Because, it may affect you later because you can't still use that £300 per day formula anymore. And if you are getting commission or bonus, it might restrict your options. So given that, it's always best to get advice because this area is becoming very specialist now.
I feel like I should just tell people because, I don't feel like everybody knows, but we do have an accountancy side still of the company, don't we? And we do deal with umbrella contractors.
Yes, we do, yeah.
So please get in touch, anyone, if you have any questions about that aspect, right? Because we can help them too.
Yes, definitely. Yeah, we can help them. And of course, we have an umbrella company as well. You could use those services. But even if not, if you're using a different umbrella providers, please speak to an advisor first because, like I said, it could make a difference, especially if you're planning to buy a more expensive property or remortgage an expensive property. It can have an impact on the borrowing.
All right, and then now let's talk more about fixed-term contractors because I know it's slightly different with them getting a mortgage. Do you want to tell us more about that?
Yeah, so that's the other type of inside IR35 contractor. Some people work as a fixed-term contractor. Now again, for them, day one contractor might not be able to get a mortgage. It's very difficult. They will want to see at least one pay slip. So the way the banks work with fixed term is they usually look for 3 pay slips, right? So 3 pay slips meaning 3 months pay slips. So that's what they're after. But sometimes banks make an exception. They might look at 1 month's pay slip, but subject to you're not having too many deductions in your pay slip, right? So if it's very straightforward, basic salary, banks love it, right? With a fixed term contractor. But even if it's a fixed term contract and they have bonus, commission, all those elements, then bank will want to see some kind of track record and they'll want 3 pay slips of yours. So you may have to wait for 3 months before you apply. And you might not get the same amount that you would have got as a outside IR35 day rate contractor. So that could have an impact as well. Again, like I said, these are like very specialist areas now. It's become a specialist area. So if you have any concerns around that, please speak to an advisor or speak to a bank who can help you. Not all banks are in this space, so there are restricted number of banks who work in this area, but sometimes you require that bespoke underwriting saying, okay, we won't look at the general rule, but we'll sort of apply common sense when we decide. So, you might need that kind of approach sometimes to deal with these things,
All right, then thanks Ifti. Any last comments for any contractors that might be watching?
Yeah. Again, I think this has been the theme throughout, right? With IR35, things have changed quite a lot for contractors. So if you're outside IR35, you're very lucky because not much has changed for them. But if you're inside IR35, things can be a little tricky. It's always, if you're doing a purchase or if you're doing a remortgage, plan this in advance because small changes could make a big difference. Like I said, if your bonus can be classified as additional pay, which some umbrella companies do, right? Because it's the same thing, right? Banks look at it in a different way. So those things, advisor can tell you, but sometimes people come and say, oh, my friend did it. But, obviously the friend's pay slip is not the same as yours, right? Because he went to a different umbrella company. So if you're into this area, like if you're inside IR35 working through umbrella company or you're working as a fixed term contractor, it's always best to get advice before you apply for a mortgage.
Yeah. Well, thanks again, Ifti, for that great advice. I will put our regular reminder out there that these points may or may not be applicable to everybody. So please do talk to an advisor to see if they're suitable for you. And if you don't have an advisor, I will leave our WS contact details below, as we're always more than happy to help. Remember, as well as our mortgage team, we also do have an accountancy team as well. So if you do need any help with that side of things, and umbrella company things, we can also help with that. A little reminder that a mortgage is secured against your home or property, and it may be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.